You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And, of course, if I sound a little bit different, it's because I'm coming to you from our southern studio, at least for the next week or so here. So not in the old Options Insider studios, normally up there in scenic, and I'm sure quite sunny this time of year, Chicago. But bear with us, and we're trying to get you the live streams and everything else out there as well, like usual. So hopefully on your end, you won't notice much difference aside from the fact that maybe I sound a little bit different, but don't worry. Other than that, it should all be the same. And of course, as always, you guys can stream us live every Friday, noon Central, 1 p.m. Eastern via Mixlr. That's MIXLR. Just grab that link and you guys are good to go. Save it, bookmark it, pocket it, do whatever you got to do. Follow us on Mixlr and you'll know exactly when we go live with all of our shows, not just Vol Views, but Twifo and Option Block and everything else that we do throughout the week. And of course, you can always listen to us via most of the usual outlets, the iTunes, the TuneIns, the Stitchers, as well as our website, theoptionsinsider.com. It's all baked in there for your reading and indeed your listening pleasure over there. And however you listen to us after the fact, live via our website, via the app, however you get us, make sure you hit us up with those questions, those comments. We do love to hear from you guys. And joining me on the old program today, let's go back. Well, I'm sure they're both back in the confines of Chicago, though you never know with the meatball. Let's start off. I believe he's in the corner office this week. He is Mr. Russell Rhodes over there from the CBOE Options Institute. Mr. Rhodes, welcome back to the program, sir.
Thank you. I'm not in the corner office.
Oh, where are you this week?
I'm in New York.
You're in New York.
I'm in the FTSE Russell offices right now, where I'm going with 40 other people to ring the closing bell at the NASDAQ this afternoon. Oh. I will be the fellow with the orange glasses and orange tie, shoved way off to the side.
Well, super exciting. I know they've been putting out a lot of images of people ringing the bell lately. Apparently, we'll see Mr. Rhodes up there. Maybe you'll be wearing your Oklahoma Sooners stuff, so we could your orange, so we can recognize
it's Oklahoma's. State.
Oklahoma State. I'm sorry. Yeah. And of course, also joining me from parts unknown. Who knows where the heck he is? Let's find out. He is the Greasy Meatball, Mr. Mark Sebastian from OptionPit.com, as well as, of course, from Carmen Line Capital. Mr. Meatball, how are things going, and where the heck are you today, sir?
I'm in our global headquarters in beautiful downtown Chicago. It's good to be here. And we got another trade here from a Chicago team on draft day that doesn't look so hot.
We'll break down all the live draft stuff. That's what everyone tunes in for, all of our live draft reviews in a little bit. Of course, listeners, if you are listening live via the Mixler, it will be a little bit different in the sense that you're not going to get all the fun music. That's all after the fact, all the transitions. We're coming at you hot and heavy here on the show this week. So without further ado, let's dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, welcome to the Volatility Review. This is indeed the portion of the show where we break down what the heck was going on this week from a volatility perspective. Maybe some trading, maybe some trending, maybe all sorts of other fine, fun stuff going on out there, some weird developments, some things that make you go, out there in the vol space. We got it all for you. And it was another interesting week out there from a vol perspective. In fact, as we are recording this and streaming this live right now, ye old VIX Cash has broke to the dark side south of the 10 handle back into single digits, 9.96 as we I'm going to look right now. I was kind of joking when I did this for you last week, Mr. Rhodes, but actually I had your ghost for the crystal ball picking 9.15, and it doesn't look as crazy as it did when I did it for you about a week ago. So we'll see how this hour plays out if Mr. Rhodes and his ghost's prediction does indeed come to pass. And of course, most of the other major indices up on the day. Seeing a little green on the screen out there in the NASDAQ, about up nearly half a percentage point. The S&P up about a third of a percentage point, and the Dow effectively unched up slightly on the day. But all of that enough to combine for a nice drubbing, a nice shellacking, if you will, out there in the vol space today. And since you haven't been on in a while, Mr. Rhodes, we shall start with you. What is catching your eye out there in the volatility space this week and today?
Well, it's all about the weekly stuff, and I don't want to talk about that yet. Earlier in the week, VIX seemed to be holding well, regardless of what was going on in the S&P 500, and I thought we were getting some early indications that maybe the bottom for VIX was in this year. And of course, we come in on Friday, and as you just mentioned, we broke 10. We're above 10 now, but we broke 10 for a moment or two, which I'm a little surprised at, actually. I felt like we were starting to see a little firming of double-digit VIX, and it would for the rest of the summer.
Yeah, it did seem like we had maybe put a little floor in somewhere in the double digits for at least the next couple of weeks. It seemed like we had a little bit of firming up going on out there. And then you're right, this week and today, all that floor having been knocked asunder. And again, we are hovering, flirting, just dancing around that 10 handle right now, which is ever so interesting to watch here on the old program. Mr. Meatball, same question for you, sir. It's been a bit of an interesting week. We obviously started off with volatility in one area. Now here we are ending the week yet again with volatility in perhaps a little slightly different arena. What caught your eye this week from a vol perspective, sir?
What's interesting is that the big kind of news the last couple of weeks has been this huge NASDAQ rebalance, right? So I dug a little bit in, and it really, if you look at the different stocks, like the major stocks that just died, all the mega caps that got murdered by that kind of Goldman note and quote unquote, and fall through that came with it. Really, Amazon's back to kind of where it was prior. Facebook is where it was prior. So is Google's about there. The only name that really just never recovered was Apple. And now today, Apple is the strongest of those names. So, things look like they're stabilizing. We're also seeing some kind of, lots of M&A news and things like that can drive trading. So, I feel like we're heading into the 4th of July weekend. There is not a lot of big news coming out, no elections. And, we might, with a health care deal, looking like it's coming together, tax reform might actually hit the kind of front and center, and that could potentially drive markets higher. In addition, it seems like this whole Trump-Russia thing is kind of going away, which is weird, but that's the way it kind of feels. And that also could be another reason where vol drives lower.
Yeah.
What Trump-Russia thing?
What's Trump-Russia? There's no. I mean, that's just it. There is no Trump-Russia thing.
Yeah, the dead horse is maybe a couple of entrails and a hoof at this point.
Yeah,
because it has been beaten to death.
Yep. And I think when they had Comey on and he also threw Loretta Lynch under the bus at the same time, that kind of effectively killed all the Trump momentum, which is kind of interesting.
Maybe we don't want to talk about this anymore.
Maybe we don't. Maybe we're all sick of it.
Of course, like I said, it was an interesting week. VVIX slightly off what it was last week. It was in the high 80s. Now it's in right around the mid to low 80s right now. So not exactly a banner week for all things volatility. Before we keep rolling on with some other things. There's been a lot of interesting chat out there in the volatility space. You pick a day. It doesn't matter what's going on in the market. You're going to see a lot of write-ups, analysis, call it what you will, about all things VIX. Some of the latest coming out of Barron's, which actually an author I'm not that familiar with. I forgot her name, Kim something, I believe. And she was going the old standby. VIX, not a fortune teller. A lot of people asking us about this one, so we thought we would bring it up here as well, talking about how VIX, as it compares or relates to the old Goodhart's law, which is when a measure becomes a target, it ceases to be a good measure. This is kind of related to what we talked about last week on the show, where so many that rippling of that cascading, that domino effect out in VIX land, with so many funds and others focusing on VIX as a benchmark or as some sort of trigger level for their strategy or things. When these things start to happen, does that impact the efficacy of the value of the indicator itself? And she goes on to cite, it's an interesting article. Again, it's called VIX is Not a Fortune Teller. If you want to read it for yourself, listeners, I'll put the link in the show notes as well here from Barron's. But they say effectively the old use case. She relates to it as it compares to equities, the adage of when VIX is high, you should buy stocks and sell them when VIX is low. She says that's no longer apt. She's citing actually some research here from Leo Chen, who works at Cumberland Advisors, again, because of going back to this Goodhart effect. A lot of great visuals in the article as well. Interesting stuff. She also makes an interesting analogy to WTI, seeing a similar analogy between WTI and, of course, OVX, which is the VIX of crude. Mr. Rhodes, I know you love all these sorts of analyses and debates over the efficacy of VIX and what you should use it for and things like that. What's your take on this piece here and them saying VIX is not, and even though we call our final segment the crystal ball, that VIX itself is not a crystal ball?
Well, the part in there where it said that you're supposed to buy stocks when VIX is high and sell them when VIX is low, is that what I read in the show notes? I don't ever remember saying that. Do you ever remember saying that?
Yeah, that one stuck out to me as well. I was trying to interpret what the heck she was trying to say.
Yeah, maybe I automatically look for the mistakes in these things, which are usually pretty easy to find. I've been in New York all week, and I was meeting with somebody that said just about everything he reads about VIX seems to be wrong. Which he said it, I didn't say it. Because and we were talking about VXX versus VIX and some other things that have come out lately. But, I don't ever remember of VIX being an absolute, here's a rule that you have to follow type of indicator. I've always felt like it was a good relative indicator. What's it doing relative to what the S&P 500 is doing?
Right.
It didn't do what I thought it was going to do earlier this week, where, when you asked what caught my eye this week, VIX holding up a little bit, regardless of what the S&P was doing, was kind of catching my eye. And very often we can look back and see, well, VIX held up a bit. And, it was kind of a predecessor to some sort of sell-off in the equity market. So, I don't think we've ever had any absolute rules with respect to VIX. Just because it's been at relatively low levels. It's been at relatively low levels, and it is basically, which means we're projecting a slow, orderly market. And what have we had? A slow, orderly market. So
right.
If you're going to say it predicts stuff, and the thing that it's supposed to predict is subsequent volatility, it's done a pretty good job of that this year.
I'm glad you brought that up about what she was comparing about buying when VIX is high and selling. Because when I first read that, I thought, wow, she's actually getting pretty sophisticated. She's talking about some of the more esoteric arguments we make on the show that are very controversial, that maybe when VIX is rocking and rolling is the time you want to get into vol, and when it's cheap is when you want to sell it. But after I read it again, I realized, no, she's actually talking about it as an equity indicator, which I don't recall ever saying that on this show. I don't know anyone else who has, but maybe she views VIX differently, hence the title of this article. Mr. Meatball, what are your thoughts on this?
Yeah, I mean, that's the idea that you use VIX in that capacity is silliness. But, it is, to Russell's point, I use it the same way. I mean, I look at, like, how is VIX performing relative to the S&P? Then there's a real value there. But it's laughable the amount of people that try and pull moving averages and candlesticks and Elliott waves over a mean reverting volatility index. It's just shocking how such a prominent and well-known index can be so ridiculously misunderstood, mischaracterized, and misquote and really misreported on. So that's kind of my interpretation of this piece. Although like you said, at least they had some, a couple of interesting things to say.
Part of what I've been doing a variety of things over here this week, and one was I met with the Market Technicians Association Curriculum Committee, who basically puts together what you got to read and what the questions are on the Chartered Market Technicians exam. They're going to expand the use of VIX in the next curriculum upgrade as an indicator. But the way that it's actually taught and going to continue to be taught in the CMT program is what's it doing as a potential confirming indicator versus the S&P 500. So, kind of the authority on technical analysis is going to be teaching it that way.
I like it. Of course, we've had many great, interesting debates and conversations on this show about the efficacy of technical analysis, particularly as it applies to VIX, a very contentious issue. I don't think we've seen the last of that one out there. The diehard technicians out there insist you can apply that analysis to everything. A lot of others, including many of us on the show, say maybe you got to slow your roll a bit when it comes to VIX. Interesting stuff to say. Speaking of maybe schisms, dichotomies of opinion, or just outright feuds, call it what you will. This is why I'm glad I'm not in the academic space, Russell. I know you float around the academic space quite a bit. You're still working on your doctoral thesis someday, hopefully to be a Dr. VIX, but it does get a little petty sometimes, a little snipey, a little he said, she said, and that's exactly what we saw this week in the VIX space. With our friends over there in the Journal putting out an article. A lot of you guys are asking us, including, I'll name a few of you, LVC4 and Anthony Emelenko, saying, hey, what about this article from the Journal? Is it correct? And Emelenko saying, hey, I thought Whaley was the father of the VIX. What is up? It was this article effectively saying academics clash over VIX bragging rights. Russell, I know you're knee deep in all this he said, she said out there. Why don't you summarize it for our listeners who haven't read it, and maybe set them straight on what the heck the actual history of this thing is?
I'm going to be Switzerland between these guys, but Menachem Brenner, who's at NYU, he did some work in the academic space, some very important work with respect to market volatility in the mid 80s before CBOE hired Whaley in 1992 to go off on a summer sabbatical and come back with the first iteration of what we use as VIX. VIX has actually gone through a couple of transformations since the original version. I'm gonna put it like this. Ed Thorpe, who was out at our risk management conference in California this year, he's been around forever, and he basically created a model very similar to Black-Scholes before Black and Scholes did. And he talked to Fisher-Black a little bit before the actual Black-Scholes model came out. Now, Thorpe's not running around saying that he actually came up with it. Some of his idea, he was actually, instead of publishing it, he was using it to make money. Go figure. And I think Brenner was actually using it as a trading vehicle or something to determine how to go about trading, about doing some trading at the Amex options exchange. So he was using some form of a volatility index. But what became VIX was done by Whaley, not saying that Brenner didn't do important work, but Whaley's the one that CBOE hired to do this. What I'm really hoping for, and I wish that we could have a little light that goes on that tells everybody I'm being sarcastic. But what I'm really hoping for is I do some great work in volatility, and they give a Nobel Prize for it, and they split it between me, Brenner, and Whaley, and I have to sit between two of them at dinner.
There you go.
And I'm looking forward to being at that dinner, eating a steak to say congratulations. That'll be fun for me.
Well, and I actually wonder if that's why who gets the credit. If there's, I feel like there's something else going on here, and this is, we've had a lot of, I've been around out and about with a lot of people, and we've had off the record discussions about this one here in New York, and it's like, did Whaley back over Brenner's cat once in the early 80s when they were at the same university or something? I feel like there's, we should get Paul Harvey on and find out the rest of the story.
I like it. Well, it's the old adage come to life, right? Success has many fathers, defeat is an orphan. VIX, however you carve it up, has been a success. So a lot of people like to stick their hands up and say, hey, that was me. That's my baby. And maybe, who knows, maybe VIX has many fathers. Maybe VIX has got around quite a bit. But interesting stuff. Interesting. It is interesting we're in this era now where gossip, or effectively gossip, over who created a very obscure mathematical index is making it into the journal. That's how far volatility has come.
Successful math has many fathers. Failed products are orphans. You know that old saying, right? Successful differential equations have many fathers. Failed differential equations, they're all orphans.
Many orphans. Many orphans out there in the
No one's claiming to be the father of VXST.
Yeah. Oh, that one was mine. I'm taking credit on that one.
That was Russell's baby. Moving on to some other things here. Of course, the Skew Index still a lot calmer than it was last week, right around 130, almost 131. So coming off a bit from where it was this same time last week. It had an interesting little spike. We actually dove into it a bit on TWIFO to see what was causing that. So check out that episode if you haven't already to see, as we got into that a little bit in a little bit more detail out there in the S&Ps. The VIX Futures also nice little move to them as well. About 1.5 points in the front month and about 2.3 or so points between the cash and 2 months out there. So a nice little curve there for VIX land as well. I wonder what our friends over there in the mullets/Tulum think about all this. But of course, now, listeners, it's time for that part of the show with the best music, which of course you won't hear live.
No music.
What was that? Russell and Mark we'll sing it for you.
And now, Russell's weekly rundown. There you have it.
There you go. That was an impressive approximation of it. Yes, it is indeed time for Russell's weekly rundown, the portion of the show where Mr. Rhodes goes on for about 28 minutes or so about all things VIX weekly options. And I could hear him crinkling up his notes there, uncrinkling, I should say, for the show. Russell, I'm actually gonna start you off in a direction this week, I think, as well, because I think you're probably going to go here anyway, but let's just get to it. Of course, we talked on the show last week about these shall we say, interesting, some might say crazy, 23,000 purchase of these weekly calls that were expiring on the 21 strike in VIX that were expiring this week. They paid a dime for those bad boys. In hindsight, perhaps not the best trade. How did those work out? And it looks like they may have indeed rolled those. Do you see looks like they did that as well to the calls expiring on the 28th for a dime? Is that your take as well, sir?
Not only that, but a lot of if I only had a minute to talk, I would talk about the June 28th, the 19, 20, and 21 calls. The open interest is 36,000, 21,000, and 26,000 respectively, and a big portion of that looks like buying.
Mm-hmm.
A whole lot of that looks like
didn't we look at are those the ones we looked at last week? You
probably did. You're probably looking at the June 21st expirations, because a lot of that trading has been going on this week, and it's I'm going to call that a VIX doomsday stupid.
Well, yeah, and
because that's what it's going to take for these guys.
Well, and
to pay
look
off.
at the July 5 19 calls. 10,000 of those have traded.
They're going farther and farther out, even to July 26th.
Yeah.
And actually July. Well, we're jumping around a little bit, but so the 19, 20, 21 calls looked like they were paying a dime for most of the 19 calls, a nickel for both the 20s and 21s. Kept showing up over and over again during the week as more of a buyer than a seller. Somebody sold some July 26th 15 calls. They sold about 6,000 of them on Tuesday for 65 cents. So they're I guess they're hoping that that VIX will stay under 15. Somebody else sold 750. There have been some sellers. Somebody sold 750 of the June 28th 20 calls for a nickel on Tuesday, but the balance on those out of the money options has been on the buy side. Got a couple of those selling the put, buying the call spread trades on Wednesday using the July 26th is again. I guess people think July is going to be a tough month. Somebody early in the morning sold the July 26th 11 puts, bought the 15 calls, and sold the 30 calls. And the net there was paying 14 cents. I don't know why you wouldn't. I don't know why you wouldn't do something like that and try to get a credit. But I'm not the one that did the trade. And then somebody also sold again the July 26th, the 10.5 puts for 21 cents, bought the 17 calls for 54 cents, and then sold the 30 calls for 15 cents. And spent 18 cents on that spread. It's interesting to me that they're shooting for July 26th. I don't know what's on the calendar because I've covered 17 time zones in the last 3 weeks. But I find it interesting that they're going a week beyond the standard expiration to use the weeklies. They're going beyond July 19th. So they're looking for something between the 19th and the 26th. I just don't know why.
Yeah, the weeklies have been a fascinating area of the space to watch this week. Of course, not just that rolling one trade, which did seem kind of like an oddball trade, but it does seem like they're keeping that love alive for that strike, at least in particular, over the next week or so. But as Russell alluded to, a lot of the other weekly trades showing not a lot of love for VIX going forward into July. It's like they looked in the past or something and seen what's gone on there in the past. Looking to the week that was in the mothership, in the big VIX options. It was a fairly active week. Yesterday, one of the lighter ones, about nearly 350,000 contracts. Today, so far on the tape, about 215,000. So it seems like another lighter day today. Wednesday and Tuesday were the big days of the week. 912,000 contracts going up on Wednesday, and over the M into the M range. 1.3 M going up on Tuesday. Not too many products you see out there putting up over 1 million contracts a day, and VIX can do it with some regularity. Monday, about 746,000 ADV, a little bit lighter than it was, right around 690,000 contracts. Overall, VIX call to put getting up there, getting into the range where Mr. Road is starting to get a little bit uncomfortable. It's about 4.1 to 1. Are you starting to sweat, Mr. Rhodes, getting into over the 4 range? You starting to get nervous?
No, I'm not nervous. I'm never nervous.
Oh,
I'm cool and
collected. You said you started getting antsy around 3, so we're a whole handle beyond that. I figured you got to be in like DEFCON 4 right now or something.
Oh, I'm very calm. Cool, and collected.
That's no fun. We'll get rid of his calm demeanor, instead move on to the hot VIX strikes, what was lighting it up this weekend. You'll see an interesting change at the top for the better part of the last few months. It's been the 30s and the 35 strikes that have dominated the board, been number 1 and number 2, respectively, for everybody out there. And yet, so far this week, it's just been not so much, shall we say, with the July 20th starting off 235,000 with a bullet. So you can see, first off, the size has decreased quite a bit. We were looking at the 30s and 35s well north of 350,000 contracts. So we have seen some closing, some moving out of the 30 and 35 strikes. 30 is still active, though. 222,000 contracts open this as of today here. So there's still a hot strike. Number 2, certainly, but nowhere near the monster, the juggernaut that it was just a week or 2 ago. So interesting stuff going on there, perhaps reflecting this new outlook for vol here coming into July. Number 3, the 15s, one of the more reasonable strikes on the list. Moving on up the list to number 3, 218,000 contracts. And here we are, number 4. Got to go all the way down number 4 to find our old friend, formerly number 1 or 2 of the July 35s, 213,000 of those bad boys. Number 5, the July 18s. Once again, another reasonable strike somehow sneaking in there. Number 6, we find our first, and not the only, but our first August culprit on the list. The AUG 20s coming in 182,000, hot and heavy on the list. Number 7, the July 17s, 176,000, tied almost exactly with the July 21s, also 176,000. Number 9, the AUG 25s, getting a little bit farther out, getting a little bit farther up there, 168,000 contracts. And number 10, round out the top 10, also an AUG, the AUG 21s for 131,000 contracts. That 21 strike starting to get on people's radar a little bit here. Of course, we talked about it in the weeklies. Now in the monthlies, it's starting to light up as well. 2 21 strikes in our top 10 this week. So who knows? Mr. Rhodes, what do you think? Perhaps is 21 the new 30?
21 is the new 30. Everybody knows everything they need to know in life at 21.
You know, that 21's the last really big, I guess 25 you can rent a car, but other than that, it's the last big milestone, right? 21, total outstanding 7.08 million contracts, about 7.1, so about 5.7 on the calls and about 1.4 million on the puts. You talked about the rolling of the weekly calls. You also talked about those last week, those 35,000 AUG double calls. You weren't here for those, Russell. Someone sold 35,000 of the AUG doubles for 0.059 cents last week. So got some nice little splits there. Found a very willing bid, which is interesting.
Do you, a few weeks ago we had that big debate, and like all the brokers were telling everybody that it was actually a buyer, and this time they actually admitted the truth that it was a seller. We had that, that where they were sending out mixed messages. I got a nod and a wink that they wanted to spread misinformation.
Oh, well, I'm glad we could facilitate them in spreading this misinformation.
Yeah, well, you two were the ones that were doing it. You kept arguing with me, and I kept saying, no, it was a seller, I swear.
Actually, I believe it was some listeners in our chat room who were arguing with you, sir, on the veracity.
Well, Mark Sebastian's broker also
gave me bad information.
Yeah, that's right. So
that jerk.
Don't bring me into it, man.
That guy.
I gotta mute myself.
He's fired. That broker.
Yeah. Hey, I'm in the same building with them, and I don't have security between me and them.
I've moved on. I said, you guys are all fired for this type of besmirchment of my reputation via your poor information.
They're sending you out there live armed with poor information. You got to cut them loose then. Bad shows.
Exactly. They're
got to cut them loose. If they're giving you bad color and bad shows, and you got to cut them loose. Let's talk really quickly about VXX. You guys all love this bad boy too, and we'll get into maybe some commodity vol, lighten it up this week as well. VXX is, of course, that product we love to love or love to hate here on this program. You guys seem to love to hate it and love to love it as well. It's been lighting it up again this week. Not quite VIX numbers, but still pretty active. 364,000 contracts a day, and I know a lot of products out there in the options ecoverse would kill for that kind of volume. It's actually still pretty tight, about 1-to-1, 1.1 to 1 calls over puts out there. So not quite as call heavy or as put heavy as you might think it would be out there in VXX land. You guys, Russell's probably seen the notes, so I won't ask him. I'll ask you, Mark. What would you think if you had to guess right now? The number one options position out there in VXX land. Go ahead, fire away. See what you think.
What is the number one options position in VXX? I'm gonna say long the 12.5 puts.
See, I would lean that way as well. I would lean some long-term leap put somewhere in that range. And if we did that, we'd be close. I'd be number 2 or 3. The number 2 is the Jan 2019 5 put. I like that, very aggressive.
Oh, jeez.
The number 3 is the Jan 2018 10 put, so a little closer to home. But number 1 is actually the SEP 16 call. Almost 100,000 contracts open there.
Really?
Oh, jeez.
That one kind of surprised me. I thought that was
Those
worthy
won't work out.
Pointing out there. We talk all the time about the set it and forget it trade that is VXX, particularly on the long-term puts. We had, of course, Ophir on not too long ago trying to talk the other side of this, selling the call spreads. Maybe someone out here is just there's no other strikes here that are really relevant. So it's not like there's a spread on out there. It's just the SEP 16s that are fairly active, and all the rest are pretty much puts. So interesting, except for the July 24s out there as well. 53,000 of those, number 7 on the list. So weird stuff all around. I just thought I would bring that up because that one kind of surprised me as well. that was the number 1 with the bullet strike out there. Let's move on. Unless you guys have anything else in the VIX mothership land, let's move on to some commodity ball. Things have been interesting. I mentioned at the top of the show that article that we kind of disputed a little bit about all things VIX not being a crystal ball. They also mentioned kind of how WTI and OIV or have been moving have an interesting relation to each other lately, kind of moving almost in lockstep, which is kind of weird. OIV right now right around 31.5. OVX, which is the USO variant, 32.6. So interesting stuff out there. Of course, crude's been taking it on the chin. We've seen whenever crude takes it on the chin, we do see vol get a little bit of life out there in crude. That's where the bid is. The bid is still to the put side, even though that the near term, the calls get some love now as well. We'll get into more of that if you're interested in that. We'll get into more of that in TWIFO in a little bit. Mark, I can hear you typing ferociously, so I know you're interested in these. You would watch USO more than you watch WTI. I know you've been looking at these USO puts. What's been catching your eye out there?
Well, I mean, we saw another huge trade go up this week on the 20th. And it was between, remember we had about 3 weeks ago a discussion about our USO August 9 put buyer. Guy bought the August 9 puts on, let's see, way back when. I mean, USO, I want to say, was trading like 11 at the time. And this guy bought just a ginormous chunk of the August 9 puts and like 100,000 of them. And guess what he did? He rolled out of them when USO took this huge dive. USO was like over 10 or 11 at the time. It was just a great trade. And then we saw a customer come in and trade the 8.5 puts in August for size. And, those went up on, 230,000 of those went up on the 20th, just another huge trade. So I don't know what exactly is going on here, but this August guy's been really right, and I'm not one to bet against him. So I think there's some opportunity to trade around in USO, and potentially there might be some more downside in some oil contracts right now.
Yeah, it sounds like this guy has been. It sounds like all the hallmarks of a house money roll. He closes out, then reestablishes again for more size. So he's sitting on some money from the first trade. Kind of weird he didn't buy himself a little more time. You think he'd go out a little bit more than to go back to the Augs. But it sounds like you're assuming the same thing. This is the same guy with the house money roll here, Mark.
Yes, I think so.
So yeah,
he looks like he was selling them when when USO when those nines were kind of like right at the money, so he was maybe trying to take the maximum time value out of him. Or I'm trying to reconstruct everything he did here.
Yeah,
looks like he made. Yeah, I know this isn't the right way to do it. It looks like he made like 50% off of it.
Yeah, he killed it. He killed it.
Yeah, it looks like he paid like in the low 40s and maybe sold up around 60.
Yeah,
that's a nice trade.
Yeah, he did really, really, really well on these, and he's a happy camper. And he keeps being interested. He keeps, as long as he keeps it on, I'm going to be bearish.
He's your new bellwether. Well, hard to bet against him right now. It seems like crude bears are in the driver's seat, at least for now. We'll get to that a little bit more again, like I said, on TWIFO if you like all that fun stuff. Meanwhile, though, it's time for you guys to jump into the hot seat. It's time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Like the man said, this is the portion of the show where you guys take the reins, questions, comments, insights, insults, perhaps directed to the meatball or so, and indeed pearls of wisdom. We welcome them all. At Options over there on Twitter, Options Insider on Facebook, at Options also on StockTwits, questions at theoptionsinsider.com, as well as it's all baked into the mobile app. And on the times when our stream is running, you can hit us up live via the live chat as well. Doesn't seem like it's going to be working for the rest of this show, listeners. We'll see if we can get it fixed for TWIFO for you. You know, whenever we move studios, something's bound to get mixed up in the works, and it seems like the live stream is the victim this week. We asked you guys last week. We like to ask you guys questions on the segment as well. What do you think is the new source for vol, given the fact that at least it looks like for the time being, S&P vol, index vol, taking some time off. We gave you the choices of crude, metals, FX, or individual equities, and you guys chose, about a third of you chose crude, which seemed, at least this week, to be a savvy choice. So well done there. Metals and FX tying for 20%. Individual equities, so Teslas, Amazons, etc., only getting 27%. I thought they would get a little bit more love from you guys because they certainly have been rocking and rolling individual names, not the full indices, but not so much. We also asked you guys what's going to go on with VIX. How low will it get in 2017? A little bit more of VIX limbo round 2. And about 60% of you said VIX still won't break 9, with the rest of you coming in mostly around 8.5, and then a decent chunky, almost 20%, saying look out below a 7 handle in the near future for 2017. So we got a nice dichotomy there of about 2/3 saying it won't break 9, and then about 20% saying it may hit 7 this year, and then the rest coming in somewhere in between, somewhere in the 8.5 to 8 range. This week, we asked you, given the fact that everyone's talking about volatility and Bitcoin, we thought we'd ask you about that. We said, hey, with everyone talking about Bitcoin vol, where do you stand, particularly after last week's, shall we say, aggressive downturn out there in Bitcoin? Are you saying, hey, it's too volatile, I'm out? Or are you saying, hey, I'm still bullish? Or are you saying, I want myself some Bitcoin options? Or are you just saying, I'm sick to death, for the love of God, no more Bitcoin? Mr. Rhodes, perhaps we'll start with you. What is I'm not sure how much you follow the cryptocurrencies, but they are indeed a nice source of volatility at the moment. What are you feeling out there, and what do you think our audience is feeling?
You know, what they remind me of is I don't know, pets.com. That's what the price activity reminds me of. Is some of the
Bitcoin equals pets.com, the headline from Russell Rhodes. I love it.
You know what? Any non-earning internet IPO, you know, that was going to last for 3 months and then go away unless they did a secondary. That's what they remind me of. So you don't want to get in the way. You know, fundamentally that they're not going to last, but you don't want to get in the way of them in the meantime. So that's kind of what I think, what they remind me of. But you know, the volatility around them, what scares the heck out of me about them is what happens when there's some sort of technology failure. And don't tell me they're fail safe. They can't be. Nothing is fail safe. So I worry a bit about that as well when we've been kicking around or paying more and more attention to Bitcoin because there have been some early attempts at doing a Bitcoin ETF. They haven't been successful yet, but sooner or later they're going to list them. And then next thing you know, what are we going to have when they list an ETF or an ETN? Options. So I'm starting to pay more and more attention to them for sure. So was there a question around it?
Yes,
Was there this is our survey question?
What is your answer on the survey? What do you think is winning the survey? People saying it's too volatile, I'm out. They're still bullish. Or is it, as you just said, do they want Bitcoin options, or are they sick to death of Bitcoin?
I think they want options, but you're talking about our listeners, right?
Yeah, again, we preach to a certain demographic.
Oh my God.
But yes, that's your vote. Okay, Mr. Meatball, what are you feeling, sir?
I'm not thinking it's too volatile. What was my first option?
First option was too volatile. I'm out.
No, the second one.
I'm still bullish. Then I want Bitcoin options, or I'm sick of Bitcoin.
I want Bitcoin options. That was the one. That's the one I'd be for.
We should get. I want my MTV type buttons that say that.
Yes,
we should.
I want my Bitcoin options.
Bitcoin options.
I want my Bitcoin options. I would totally be in favor of that. Maybe we should make.
I saw on Twitter that there's now ads for buy Bitcoin in your IRA. If that's not a sign for a top, I don't know what is.
Because that's what you want in your set it and forget it retirement account.
A
product that can lose 18 to 70% of its value in a week, depending on the week. But you're right. There have been failures. Russell, probably most infamously, the big Mt. Gox fiasco. That wasn't a technological failure so much as it was a failure of effectively what it's not really an exchange, but a central clearinghouse, I guess, for some of those type, whatever you want to call it, a repository for the Bitcoins. And that failed, and that caused a lot of people to be kind of terrified as a result. Not sure what we're going to see here going forward. Things are kind of crazy here. But yeah, you guys, your votes coming in, not surprise, with 37%, I want Bitcoin options, which is not exactly a surprise. Our audience see, I've got some comments. People, as you might expect, this poll proving to be fairly popular. People coming in all sides of the fence on this one. Production One writes in quite a bit to the show, said SPX and VIX are far more fun than Bitcoin, also far more profitable and secure. Bitcoin snobs got nothing over the vol cognoscenti. So there you go. Vote for the chattering classes of vol versus those chattering masses of Bitcoin. Here we got a comment here from, I like this handle, Pocket Tissues. He says, or perhaps she, the Goldman guy, this is what we were talking about, I believe, 2 shows ago. Remember, we discussed the kind of differing viewpoints coming out of Goldman and out of Barclays. Goldman saying VIX was around 10, probably should be higher. Barclays saying, things could actually get a lot lower. Could be an 8 handle, maybe even a 7 handle if the juice from those puts come in. So 2 kind of diametrically opposed viewpoints out there. This Pocket Tissues says, the Goldman guy has the right idea. VIX should be above 10 right now with everything going on. One good Trump tweet, and we could be at war, and VIX is in the 20s or the 30s again? This is not an unheard of sentiment. We've kind of somewhat echoed this a little bit ourselves. Maybe not that it's going to be that high, but it does feel like, if you just go on a pure feeling, if you leave aside the basic math that is the driver of all things volatility, realized versus implied volatility, if you leave that aside for a second, if you go on a pure gut feeling, I can see where Pocket Tissues and the Goldman guy and others are coming from. It does feel like there's so much afoot out there that there should be more vol than there is. But again, at the end of the day, the numbers don't lie, and that's all we got to go on. As much as I may feel what you're feeling there, Mr. Pocket Tissues, it's just not the way it is right now, which is interesting. But you're right. Well, Trump could come out to where you see this all the time. I had the foolishness to turn on the news for about 15 minutes yesterday while I was getting ready for something else, and in that course of that 15 minutes, they talked about everyone getting kicked out of nursing homes and going to war with North Korea and about 15 other horribly dire, ridiculous things, which makes you wonder how we're not at a 30 when you look at it, if you watch the news for about 10 minutes. So a lot of interesting fluff out there that seems like it could drive us higher, but the math is keeping us right where we are, at least for the time being. We'll leave aside the debate about volatility feedback loops and all the other fun stuff for another time. Let's go to this one here from Nico. This is interesting. Let's kind of guess what we were talking about earlier with some of the other things going on with with VIX and its usefulness as an indicator and other things he or perhaps she wants to know. What do you guys think of other VIX type indicators like the Merrill Lynch Move Index and the rest? Also, what's up with Voldex? Let's do that last part first. Voldex, if you remember, listeners, was the product I think Scott Nations was talking about. He came on the show once to talk about it years ago now, and this was effectively, he was trying to take VIX and strip out all the new iterations of it, effectively, all the new tweaks on the model, which effectively added things like skew. It was effectively just back to kind of almost an old VIX, which was kind of the front month at the money. I don't know how much of an audience there is for that, but apparently he thought there was. I think they also had a skew product as well called SkewDex, which would put that back, just do the skew. So maybe they were separating it out into two separate products. Either way, it was licensed by the ISE. ISE, as we know now, is part of NASDAQ. I've inquired a few times of what's going on with that. I haven't heard hide nor hear of that, so I'm going to assume, as I haven't heard much about it, that product is kind of out there with a lot of other volatility products, and it just kind of in the ether, doesn't exist. I know at the time the sticking point for it was they needed an underlying. They couldn't figure that out if it should be an ETF or it should be a future, so the product kind of languished as a result. We all know you can't just list an option without an underlying. You can, but history shows us that probably doesn't work out too well, so you probably need an underlying to drive hedging and drive volume and actually make the calculations a little bit more valuable, and so far that seems to be a sticking point for that. As for the other parts, the Merrill Lynch Move, we talked about these a lot on the show. It seems like every house out there, they can't just go with stock VIX Russell and say, hey, here's stock VIX. They can, obviously, and there's a lot of talk about it, but they also have to have their own flavor on it, their own permutation. How far out do you have to buy a put to match a call and vice versa? I think the Move Index is somewhere along those lines. So there's 8 million flavors of these. They all kind of try to do the same thing as VIX without doing it. I don't know, Russell, you probably watch this entire universe of, I guess you can call them VIX knockoffs for lack of a better term, these things that try to do what VIX does in some proprietary fashion that's unique to the house. Do you have a particular favorite, or do you think that they're all kind of Me Toos?
I don't think they're all Me Toos. They do other cool things. The Move Index has its own way of really paying attention, I believe, to the fixed income market. And is kind of an interesting contrast to our TY VIX. It's kind of fun to see how if they both are giving us the same indications at times. I kind of like our index better because it's I think easier for people to replicate on their own. Some are just blatant ripoffs of, and actually I think the Move Index may have been around before we came out with the 10-year volatility index. So you can't really call anything that was around first a knockoff unless you're Menachem from NYU. We've talked about how everybody wants to take credit for something that's successful. When people rip off my ideas on our blogs and sell them out there as their own, sometimes I just take it as flattery.
Oh, the academic shade being thrown left and right. I love it. Actually,
Yeah.
The MOVE index isn't the one I was thinking. What's the one I'm thinking of? Must be. I think it's Barclays has that index where they measure out how far out you have to go to buy a put against X amount.
Oh,
X
yeah.
amount call. So that's the one I'm thinking of. There's so many different flavors out there. Mark,
Yeah, there's a lot.
Mark, you know what I'm talking about. What do you think about this exploding universe of effectively quasi VIXs, if not VIX?
Yeah, I mean, VIX does its job. Some of these other ones just don't. I think there's so many different ways. I mean, think about most of these as kind of, you've got the Toyota Camry, which is the VIX, which is the most popular car in the United States, or the F-150, which is the most popular truck in the United States. And you have all these other cars that are trucks that look very, very similar, that are essentially trying to do the same thing, that just have a different name. So everyone just buys an F-150 and a Camry anyway. And, I find more use in like stuff that's indexed off of other things than in actually looking at different equities. The only one that's even kind of remotely interesting is the Valdex, but that's basically VXO and doesn't really give us a lot of information. The one that's really missing and truly missing is a dynamic skew index, and if we had that, I think we'd have everything.
Yeah, the skew index thing always, or the Valdex, I never really understood how much of a difference was that between that and VXO, at least enough to merit its own product. Maybe the market agrees because we haven't seen it, but it did seem like that was treading in similar ground. Interesting stuff, nonetheless. Good questions. Unfortunately, that's all the time we got. We got to get to our final segment now, listeners. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, and welcome to the crystal ball, everybody. This is indeed the portion of the show where we all embarrass ourselves mightily trying to wrestle that slippery pig known as the VIX. As we're standing right now, it's still shy of the 10 handle, about 990 or so in that range. So actually, Russell, my joking guesstimate for you actually did look probably better than what you would have picked. You probably would have picked somewhere at the 12 handle, and so you're much closer as a result. So you should go away more often is what I'm telling you for the crystal ball segment, at least for your own record. But it actually looks like Mark is this week's winner. He was at 10.05. I thought I was aggressive with a 10 half, but Mark went a little bit darker on the south side with 10.05. Your guest filling in for you last week, Russell, Mike from Typhon. He did his best Russell impersonation. He picked a 12.25, so he was doing your job for you. He was the degenerate VIX buyer of the week. Didn't work out too well for him, unfortunately. So Mark, you get pride of place. You were the closest this week. You went over, but we're not prices right, so it doesn't matter. What are you feeling for next week?
Let's see. What did I say last week? 10.05 or
10.05.
You know what? I'm going to go 10.05.
Well, there you go. Let's see. So we're shy of the 12 of the 10 handle right now. We're going at 9. I said right about a tenth of a point below it. Let's see. So the question is, can we linger here? Certainly, a lot of the action we saw this week in the vol space saying, not a lot of love for vol. So maybe this is the time to pick an actual realistic 9 handle, not a joking one. Maybe I will do that. Maybe I will come in and I will say, not quite a record because we're not going to know if we're hit that far. Maybe we'll flirt with an intra-week. I'm going to say about 970 this time next week. So there we go. A little bit of squeezing that juice out of the old orange. And Mr. Rhodes, last but not least, what are you feeling for next week, sir?
Well, I'm going to win. And you know how come I know? And you guys can't take your guesses back now, right?
Nope.
Nobody mentioned the 4th.
Oh, 4th of July?
Yeah. Well, next Friday I'm gonna say 9.25.
Ooh.
Whoa.
No, and actually,
I'm the over.
You're the over.
We've either had the low for 2017 in, but if we get a lower low this year, it's gonna be late next week, and then that's it.
All right, I'm in.
Wow.
You win.
Mr. Rhodes.
So, I've been waiting for this specific episode to do this.
I can see how excited you are. I mean, I think this is the first. Is this the first time you've ever been lower than anybody else on the show?
No, it happened another time, and then VIX went to 20.
Wow. This is impressive. This is historic, listeners. So mark your calendar. This could be the breaking point you've been waiting for. Russell going low means
I
this
know.
is it.
That means it's time to get.
That means it's time to load up on upside and VIX.
Yeah.
Or you could be feeling what he's feeling. He's right. I did. Wasn't even thinking that the week after is the holiday. So he may have some merit to what he's saying, and certainly he studied the VIX history. But for now, we'll have to leave it there. We shall see this time next week, listeners, who is indeed right. But before we go, let me check back in one last time. Cohorts, partners in crime, people who are clicking away at their keyboards right now. Let's start with you, Mr. Meatball. What is cooking in the land of Carmen Line and Option Pit?
Hold off. I'm buying VIX Futures now that Russell is the low man. You know what? We're having a good time at Carmen Line Capital. We've been trading, kind of enjoying this relatively low volatility period. If you're a qualified investor and have interest in adding volatility exposure to your portfolio, volatility is an asset class, as they say nowadays. Then you can email me, mark@carmenlinecapital.com, and I'll be happy to talk to you about it, assuming you're qualified.
Who really is qualified to talk to you at the end of the day, sir? Very few people.
True.
I don't think I'd want to meet that person at the end of the day who's qualified to talk to you. Nonetheless, if you think you are, or you just want to know some more, hit them up, Carmen Line Capital, or indeed at optionpits.com. You too can take the masterclass. All right, and last but not least, Mr. Rhodes, what is cooking? Where are you heading for the next volatility hotspot? And what's cooking with our old friends over there at Livevol? I know they got that data shop cranking out. What else is cranking out over there, sir?
They're still working on some updates. I've got some ideas that I'm going to feed them after my world tour when I'm back in Chicago on Monday. I'm going to Washington, D.C. to meet with some academics for a couple of days and talk about volatility. Then on Thursday, I'm back in New York for some meetings. But Friday, I will be back in Chicago. It's moving day for the Rhodes household. But I won't be there to pack boxes because I promised Mark Sebastian I would come teach a session of his class. So,
that's going to be a good time.
It's either pack boxes or talk volatility.
I think most human beings would choose the latter in that choice. Check them out over there. And if you want to check out some custom bespoke data, head on over to datashop.cbo.com and type it in for yourself. If you want just a few hours worth of some tick data somewhere, you can get it over there and they'll quote you a price on it. datashop.cbo.com to learn more. And on behalf of Mr. Rhodes and the Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing. Unfortunately, you couldn't stream live this week. We'll get it back for you hopefully next week. And we'll see you next time for more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. Or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.